Hey, good morning everybody. Today is Wednesday, September 7th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started by taking a look at the Nasdaq Composite, but before we do that, stocks ended the session mostly higher yesterday as the Nasdaq set a new all-time closing high. Trading volume, as we might expect, was heavier than Friday's pre-holiday level, giving us an accumulation day or a day of professional buying in the market. The S&P didn't reach new highs, but tested and held support in the 2175 range. The S&P closed up 6.5 points or 0.30% at 2186. According to our count, the S&P has only 4 distribution days in the past month. The Nasdaq closed 26.01 points or 0.5% higher at 5275. The Nasdaq has only 3 distribution days according to our count. Distribution doesn't seem to be a major concern at this point. Note that our distribution count is different from investors.com, which tends to count distribution as relevant longer than we do. The older distribution is, the less relevant it becomes, and we stop counting distribution if it's a month old. After flirting with a margin signal yesterday, our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. The new high in the Nasdaq changed the investors.com market outlook to a confirmed uptrend in the market. Investors.com has a distribution count of 4 days on the Nasdaq and 6 on the S&P. Advancing issues bettered decliners by about 7 to 5 yesterday. New highs trounced new lows. Small capitalization stocks continue to better large yesterday and continue to outperform on a 10-day moving average basis. This is bullish. The market continues to move sideways, although the new high in the Nasdaq could stimulate the bulls. The S&P remains in the 40-point range it's been in for the past 6 weeks. The long-term sideways movement in the market is playing havoc with our market timing model. We remain on a buy signal on both the S&P and the Nasdaq, both of which were flirting with don't buy signals last week. Then yesterday we're flirting with a margin signal. For now, it's best to remain cautious until the market picks a more convincing direction. Up, down. Eventually the market will show us which way it wants to go. In the meantime, be careful and keep your stops in place and current. Okay, yesterday the Nasdaq was up 26.01 points or exactly 0.5%. We closed at 5275, which is a new closing high for the Nasdaq. We also closed right at the top of the daily trading range, which is bullish. Trading volume, as you'd expect, was higher yesterday, giving us an accumulation day. For you followers of William O'Neill, we are back in a confirmed uptrend. We've been in an uptrend since June 30th, and right now we have only 3 distribution days on the Nasdaq. And notice that none of them are clustering on the right side of the chart. I don't think distribution is a major concern in this market right now. Our market timing model remains on a buy signal, and the Nasdaq has support down here in the 5232 area. We have no resistance. We're up here in uncharted territory. See what the S&P 500's up to. S&P yesterday had a little bit weaker day. We were up 6.5 points or 0.30%. We closed at 2186. Trading volume was heavier than the prior day, giving us a an accumulation day. The S&P is in a confirmed uptrend with 4 distribution days. Again, these distribution days are well spaced. They aren't really clustering on the right side of the chart, and so not much of a concern. We are on a buy signal on the S&P 500 on our market timing model. The S&P right now has support in the 2175 area. Notice how it closed at the top of its daily trading range. That should make the bulls happy. Let's take a quick look at our position trades. We currently hold 7 position trades, which is quite a few. Generally, we want to hold no more than 5 positions. We currently hold BABA, which we bought out of this first stage cup and handle base when it gapped on earnings. Yesterday, BABA put in a new high and is acting very well here. We also have ACIA, which we bought out of this IPO base at 43.10. Stock's now trading at 123.44. That's very close to the prior high, and interestingly, the ACIA is putting in this high tight flag formation, which it broke out of yesterday on very high volume. A high tight flag is one of the most aggressive chart patterns that we follow, and also has the best chance to make significant gains. Yesterday, when the stock broke above that high tight flag, we added to our position. We have Max Linear, which we bought at 1734 on the bounce off of this trend line. ZBH, Zimmer Bio, we bought at 123.43 all the way back in July. EW, which actually had a pretty good day yesterday, almost getting back, I guess recapturing the 117.46 that we paid for it. Would have liked to have seen more volume in Edwards Life Sciences yesterday. We have Mobileye, which has not been acting well at all. We bought Mobileye when it poked above this first stage base at $51.18. Right now it's trading at $48.93 and has never really done much of anything. Might be a good place to raise some cash in the event that we need it. And finally, MEDP, MedPace Holdings. We bought MedPace on the breakout of this IPO base. And yesterday it had a wonderful support day. Notice how the stock traded lower during the course of the day, but closed right near its high for the session. That's a support day. That's a bullish indication, even though the stock closed lower yesterday. Let's take a quick look at our swing timing holdings. Yesterday, the Nasdaq closed above its 5-day simple moving average, which we show in pink. Its 10-day simple moving average, which we show in green. And the 5-day simple moving average is trading above the 10-day simple moving average. That's our definition of a buy-long signal. We triggered a buy-long signal yesterday, and so we bought some stock. We bought SIMO when it bounced off of its 50-day moving average and took out the high of this prior day. Stock then closed back in that base. We'll keep an eye on it and see if it wants to continue to respect its 50-day moving average. CYBR. Again, we bought on the bounce off of the 50-day moving average. We bought when the stock gapped above the high of this bounce day. And so we bought it at the open yesterday. Ditto EDU. We bought at the open when the stock gapped above this higher close above the 50-day moving average. And finally, at the close, we bought SUPN as it bounced above its 50-day moving average. If you want to learn more about position trading or swing trading, please give me a shout. My contact information's on the homepage. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.